Assalamualaikum and good day everyone. We are Group 1 from Managerial Accounting. Today we will present our project entitled Master Budget and Cost Volume Profit or CVP analysis for Crispy Delight Food Industries. First, I will begin with the introduction to budgeting and the company background before continuing with the next sections. First, let's look at the introduction to budgeting. A budget is an important management tool that helps a company plan its business activity in advance. It estimates future revenue, expenses, production needs, and cash flows so that the company can use its resources efficiently. The main purpose of budgeting is to plan financial activities, allocate resources efficiently, monitor financial performance, and achieve the company's strategic and operational goals. Now, I will explain the importance of budgeting. First, budgeting helps with financial planning by anticipating future financial needs. Second, it improves resources allocation so the company can use its resources effectively. Third, budgeting helps minimize financial risk. It also allows management to compare actual performance with the budget and take corrective action when needed. Finally, budgeting improves coordination by ensuring all departments work towards the same business objective. Budgeting has three main functions. The first is as a planning tool. It helps management forecast sales, estimate production needs, plan purchasing activities, estimate labor requirement, and forecast operating costs and cash availability. The second is as a controlling tool. Management compares actual performance with the budget, identifies any differences, reduces unnecessary expenses, and takes corrective actions. Lastly, budgeting supports decision-making. It helps management make better decisions about pricing, production planning, inventory management, capital investment, and business expansion. Next is the company background. Crispy Delight Food Industries was established in 2017 as a family-owned business. The company produced packaged banana. It started in Kuala Pilah, Negeri Sembilan, and later moved to a larger factory in Senawang in 2024 to increase its production capacity. Currently, the company supplies its products to Negeri Sembilan, Melaka, and Johor, and it plans to expand its business across Peninsula Malaysia. Finally, the company prepares the master budget to coordinate business activities, allocate resources effectively, monitor financial performance, analyze future cash requirements, support capital investment planning, and assist strategic decision making. Overall, the main goal of the master budget is to optimize operation, maintain financial stability, and achieve long-term business growth. That's all from me. Next, I will pass to the next presenter.
The sales budget is the starting point of the master budget. Crispy Delight is projected to sell 97,000 units, generating RM 1.746 million in revenue during the first quarter. Sales are expected to increase steadily from January to March, supporting better production planning and resources allocation. Next is the cash collection budget. The company is expected to collect RM 1.621 million based on the 55%, 25% and 20% credit collection policy. Cash collection also increased throughout the quarter, helping the company maintain a healthy cash flow. For the production budget, Crispy Delight plans to produce 98,500 units during the first quarter. Production increased every month to ensure sufficient inventory is available to meet customer demand. For the direct materials budget, estimate the raw materials required for production. A total of 24,625 kilograms of raw material are needed, and the requirement increased throughout the quarter in line with production. Next is the direct materials purchases budget. The company plans to purchase raw material worth RM 222,615 The purchase cost increases gradually to support higher production requirement. Next, the direct labor budget estimate the labor cost for production. The total labor cost is RM246,215, increase from January to March as production continue to grow.
This slide presents the manufacturing overhead budget for the first quarter of 2026. The total manufacturing overhead is RM 1,3300,250, consisting of 49,250 in variable overhead and RM 84,000 in fixed overhead. The variable overhead changes according to the number of direct labor hours used, while the fixed overhead remains constant throughout the quarter. After excluding the non-cash depreciation expense of RM 4,500, the company expects cash manufacturing overhead payment of 128,750. This budget helps management estimate manufacturing costs, control production expense, ensure sufficient cash is available for operation, and improve product costing and profitability. The total selling and administrative expenses for the first quarter of 2026 are budgeted at RM 307,500. This consists of RM 160,400 in variable expenses, which vary according to sales volume, and RM 191,100 in fixed expenses, which remain constant. The fixed expenses include advertising, salaries, utilities, insurance, depreciation, and an additional RM 2,500 per month for digital marketing. The additional digital marketing budget supports the company's nationwide expansion plan by increasing brand awareness and attracting more customers. Overall, this budget helps management control operating expense and ensure spending remains within the planned budget. The company plans a total capital expenditure of RM 240,000 during the first quarter of 2026. The investment includes an automated slicing machine costing at RM 35,000, a packaging machine costing RM 45,000, and a delivery truck costing RM 160,000. According to the case study, this asset will be fully financed using the company's available cash. Although this requires a large cash outflow, the investment is expected to improve production efficiency, reduce manual labor, enhance product distribution, and support the company's long-term expansion. The company began the first quarter with an opening cash balance of RM 65,000. Cash inflows are mainly received from customer collection, while cash outflow include raw material purchases, direct labor manufacturing overhead, selling and administrative expenses, capital expenditure, employee business, and loan repayment. Based on the cash budget, the company is expected to end the quarter with RM 308,520.31, which is higher than the minimum cash balance requirement of RM 60,000. This indicates that the company has sufficient liquidity to meet its financial obligation without requiring additional borrowing ensures. This slide summarizes the company's expected financial performance for the first quarter of 2026. The company is projected to generate sales revenue of RM 1.746 million, resulting in a gross margin of RM 1.065 million. After deducting selling and administrative expenses as well as interest expenses, Crispy Delight is expected to earn a net income of RM 601,319. This indicates that the company is financially profitable and able to cover all operating expenses while supporting its business expansions. This budgeted statement of financial position presents the company's expected financial position at the end of the first quarter of 2026. Crispy Delight is projected to have total asset of RM 2.30 million, consisting of current assets such as cash, account receivable, and inventories, together with non-current assets including buildings and equipment. The company has total liabilities of RM 23,920.31 and shareholders' equity of RM 2.11 million, indicating that most of the company's assets are financed by equity. Overall, the balance sheet shows that the company is financially stable, maintains sufficient working capital, and is well prepared to support future business growth.
Next, I will be presenting Section 4. 4.1 Contribution Margin and Break-Even Analysis. Based on the CVP analysis, the contribution margin per unit is 11.55 ringgit, while the contribution margin ratio is 64.17%. This means that each packet of banana chip sold contribute 11.55 ringgit towards covering fixed costs before generating profit. The company's break-even point is 24,229 units, equivalent to 436,122 in sales revenue. Since the projected first quarter sales are 97,000 units, which exceed the break-even point, the company is expected to generate profit with a comfortable margin of safety. Next, 4.2, impact of selling price increase on operating income. We analyze the impact of increasing the selling price on operating income while assuming that sales volume remains constant. Under the first scenario, a 15% selling price increase with additional advertising expense of 10,000 ringgit increases operating income to approximately 1.09 million. Under the second scenario, a 25% selling price increase with additional advertising expense of 15,000 increases operating income further to approximately 1 to 26 million. Therefore, the 25% price increase provides a higher operating income. However, management should consider customer demand, competitors' pricing strategy, and market acceptance before implementing this strategy. Next subtopic is target profit analysis. For target profit analysis, the company aims to achieve an operating profit of 300,000. Based on the CVP analysis, Crispy Delight needs to sell approximately 15,636 units to achieve this target. Since the projected sales are 97 units, the company is expected to achieve the target profit comfortably. Next, importance of CVP analysis. Overall, CVP analysis helps management in several areas, including pricing decisions, cost control, sale planning, risk assessment, true margin of safety, and profit forecasting. Therefore, CVP analysis acts as an effective tool to support better planning and decision making. And then the next part is recommendation. Based on the master budget and CVP analysis, several recommendations are proposed. Firstly, the company should strengthen its digital marketing activities to increase brand awareness and expand its customer base. Secondly, management should maintain effective cost control by monitoring production costs and conducting regular budget variance analysis. Thirdly, the company should carefully evaluate any future selling price adjustment by considering customer behavior and competitors' pricing strategy. Lastly, Crispy Delight should expand its distribution network to increase product availability and support long-term sales growth. And then, next part is conclusion. In conclusion, the master budget provides Crispy Delight food industry with a systematic financial plan for the first quarter of 2026. The CVP analysis also shows that the company is expected to achieve satisfactory profitability because its projected sales are significantly above the break-even point. By implementing the recommended strategies and continuously monitoring financial performance, Crispy Delight will be able to strengthen its competitive position, achieve sustainable profitability, and support long-term business growth.